Yesterday's reversal up, I thought was impressive. Extreme sell climax down to that August high. And then actually that's not the August high. The August high is, I think, right there. And we're sold off again a second time, fairly strongly, and then reversed up a third time here. Let me go here and just check to make sure I have the right price on that August high. 65.75, that's what I thought. So this blue line is correct. Normally, I would expect a rally for the next several days after multiple strong sell-offs to support with strong reversals up. But the context is different here. We've been sideways for about 10 days, and we've had a lot of dojis over the past 5 days. Yesterday's a buy signal bar, but it's a doji in the middle of a tight range. As you know, I still think that we're probably going to pull back in the next month or two because now the monthly chart, 11 bars in a bull micro channel, really, really unusual. And therefore 12, 13, 14 bars would be even more unusual. And that makes it unlikely that it'll happen. So the odds are we'll get a pullback below the low of the prior month. It's unlikely that September will go below August, but October will probably go below the September low, or November will go below the October low, which means at least a 50-point pullback. I think more realistically, it'll be about 100 to 200 points. Here's the daily chart. Not a very deep pullback after the breakout above this high. After the breakout above this high, we retraced almost the entire bull leg. Trends tend to become weaker over time. Pullbacks tend to become deeper. This retraced almost all of that. We've now had 5 legs up in the bull channel, which is a lot. Normally, a bull channel will transition into a trading range after 3 to 5 legs up. Well, this is 5 legs up, so we're probably going to transition into a trading range. One of the hallmarks of a trading range is if you have a bull trend and it converts into a trading range, the market falls below the most recent major high or low, which is here, and that's about 100 points down from the high. This almost got to this low, a major high or low. If we do get a sell-off over the next 2 or 3 months, it probably will fall below the most recent major high or low, which means the sell-off will probably be at least 100 points. And when we get there, traders will assume the market's in a trading range, and therefore, if it rallies, it'll probably form a lower high. So it'll be a head and shoulders top, left shoulder, head, and then a rally for a right shoulder. And that entire process would probably take 2 or 3 months to complete. And that means that the market probably is going to be sideways for the next 2 or 3 months, even if we go a little higher first. The market's deciding if the top is in, does not look like a convincing top, just 4 dojis, or if we have to go a little bit higher, like here. You know, we had a lot of dojis, we went higher and reversed. So we may have to go higher and get a reversal before we go down. Yesterday's reversal was very strong. The bulls are going to try to get follow-through buying here. Typically, when you get a strong reversal like that, you have a 50% chance of follow-through buying for the first hour or two. And that's what the bulls are hoping for right here. We finished yesterday always in long. We're breaking above the 60-minute moving average. Yesterday is a buy signal bar, but a bad one. It's a doji. Just like I said, we had a bear IOI here on the daily chart, but a doji, and therefore a bad sell signal bar. On the weekly chart, I said last week was a sell signal bar, but it was a doji, a bad sell signal bar, especially after 3 big bull bars. And now we have a buy signal, that's a doji, and that's a bad buy signal bar, which means it typically will not lead to much resumption of the bull trend. In other words, if we get above yesterday's high, which looks likely right now, we probably are not going to have a big bull trend day, and we're probably not going to go up for the next several days. Do you buy right here? Arguing, always in long, very tight channel. First reversal down, minor. And even if we sell off right now, we'll probably come back up here. That's all true, but we have a bull bar, a bear bar, a bull bar, a bear bar, a couple bull bars and a doji, a bull bar and a doji, right? So we're not getting consecutive big bull bars. We're getting bull bars with weak follow through. So that means it's a series of buy climaxes. That is less likely to continue very far up. It's more likely to evolve into a trading range. Even though we're accelerating up in a parabolic rally, we're not getting consecutive big bull trend bars. So that will make a lot of traders hesitant to buy the close of one and buy above one. You can see the open of 2 is above the close of 1. So that tells you that a lot of traders just hit buy the market as soon as 1 closed, betting that we were going to go at least a little higher. This is a major lower high, very strong breakout to a new low. If the market gets above that, then the bulls will try to get up to the next major high, which would be here. We have a little gap there, but I think this is more important. And all-time high, as I said, I don't think it matters if we get a new all-time high, because I think the odds are the bulls will have a hard time getting much above the prior high, because the monthly chart is so overbought. For the bears to sell this, look how tight this channel is here and from here. First reversal down probably will be minor, so there probably are buyers below 2. Let's say 2 is a huge bear reversal bar. Well, then I'll change my mind. But right now, even though a reversal down from here would be a failed breakout above yesterday's high, right now it's about a 7 or 8 bar bull micro channel and a 20 bar very tight bull channel. Therefore, the odds are against a big reversal down without the market going at least sideways for 5 or 10 bars and forming some kind of a double top. $10 tight bull channel, unlikely to be a major reversal, even though it failed breakout yesterday's high. Bad momentum, bad follow through after the bull bars, unlikely to be a big bull trend. So if it's not going to be a big bear trend and it's not going to be a big bull trend, we're probably going to go sideways fairly soon. Sometimes yesterday's reversal was so strong we might rally for an hour or so, but I think we'll probably soon go sideways. A bad buy signal bar on the daily chart, probably not a big bull trend day today. 10-day trading range, probably not a big bull trend day today. Bad follow through after the bull bars in the rally, probably not a big bull trend day today. We are reversing down below the breakout above yesterday's high. This could be one of those days when we get a second reversal down from yesterday's high and then a swing down. Because we're in a 10-day trading range and we've had trading range days every day for 10 days, today's probably going to be another trading range day, which means it'll probably have at least one leg up and one leg down. Legs in a trading range day typically last 2 to 3 hours. Yesterday, the initial sell-off was only 1 hour. Then we went sideways for a few hours and then up for an hour. The market right now is deciding on the direction of the first swing. We're not that far above the 60-minute moving average and the 5-minute moving average, so we may pull back here, but unlikely to be a big swing down when a channel up is as tight as that is. 15-minute day session chart, really tight bull channel, very unlikely to become a bear trend. The first reversal down probably will be a higher low, but if it does reverse down, it could be pretty deep, because big down, big up, big confusion means the trading range, and we could easily even pull back below this breakout point before we try to get a second leg up. So bullish, but not strongly bullish. You can see the limit order bulls buying below 2 made a scalp. And the bulls who bought the close of 1 got filled 1 tick higher. And some got filled 2 ticks higher, but most got filled 1 tick higher, and they got a scalp. This is a high 1 buy signal, but the day so far has 3 dojis, and we're at resistance. We're at a major lower high. Do I think we'll get above it? Well, probably we will. You know, we have a lot of trading range trading, and when the market has a lot of trading range trading and it rallies, it usually does not reverse until it goes above some significant resistance, which would be this major lower high. So we probably have to get above there. We spent a lot of time here at this price, and that is therefore a magnet, even though we reversed down from it. Even though we reversed down from it, the market kept trying to get to it, and that means it's a magnet. A lot of times it'll regroup. It'll sell away and sell down from it, a ledge, and then the bulls come back strongly, and second time up they can break through it. So I think that is also a magnet. But look at the past 10 days or so. You know, we've had some swings lasting an hour down to a couple hours down, a couple hours up, a couple hours down and up. Unlikely that this is going to be a big bull trend. It's a wedge bull flag, 1, 2, 3, in a bull trend, and therefore we could go a lot higher, but I think it's more likely we'll get some follow through buying at some point today, maybe here in the open, and then start to do this. I hope it does this, because I like it when the legs are 5 or 6 points tall, because then it's easier to make 2 points on the reversals. Bar 2, a pullback from the breakup above yesterday's high. It's a high 1 buy, but 4 doji bars. A lot of bulls do not want to buy this far above the average prices when the follow through is bad and the buy signals look like that. So we may have to pull back before the bulls are willing to buy again. And for the bears, the channel is very, very tight. They are not eager to sell, even with limit orders above highs. So right now, nobody wants to do anything. The bulls do not want to buy here. The bears do not want to sell here. So we might have to do this for 5 or 10 bars. Remember I said that the bears would try to get a second failed breakout yesterday's high. That means if the market falls below 5, that would be the sell signal. If 5 goes outside down below 4, that would be a sell signal as well. First reversal down from above yesterday's high, second reversal down. Here's an example of an outside down. First reversal down was below that bear bar, and then the second reversal down was below the bull bar. In general, higher probability to sell below bear bars, and therefore, maybe sell below this bear bar instead of below the bull bar. Very strong rally, yet second failed breakout yesterday's high led to a couple legs down. Same thing here. Big gap up, decent reversal up, second reversal down led to a bear trend. Second reversal down here, we went sideways, but the stop is above the sell signal bar, and this did not go above that. Still got a swing down. Same thing here. First reversal down here, second reversal down here. We entered a triangle, but the swing bears, their stop never got hit. First reversal down, second reversal down. A lot of traders prefer to sell below a bear bar, which would be here. This is more like today. Gap up, couple bull bars, and bear IOI, second reversal down. Again, gap up, rally from dojis, and first reversal down is here, and then we have an inside bar, so a second reversal down below the doji. Some traders prefer to sell below bear bars. So we might get a breakout and then a first and second reversal down. Still always been long and still magnet above right there. I don't want both of these lines in here, so I don't want too many lines on the chart because then the chart is hard to read. As for selling the 4 high, for me, even though it's 4 dojis at resistance, the channel is too tight, so not a strong sell. Now, I've been talking about, okay, so here's the sell signal for the second reversal down. Very tight bull channel, possible high of the day, higher probability to wait to see if we get a strong reversal down. Now, every time you have a setup like this, there's always an opposite concern, right? So it's a reasonable sell for a swing down. However, probably buyers not far below the 2 moving averages. There's also, every time there's a setup, there's always a failed setup, which means you trigger the sell below 5, and instead of going down, you continue up. Like this. So first reversal down, second reversal down, and instead of going down, we went sideways and then we broke to the upside. First reversal down, second reversal down below a bear bar. Instead of going down, we got a bull bar and we went up. Reasonable short, right? But 40% chance it's going to fail and we'll go right back up. Those dojis, I think, reduce the probability for the bears. The dojis mean the market is balanced and it's less extreme buying. It's not like the market is racing up and it's overdone and they made 2 attempts to go up and failed both times. So there's not a climactic element to this. So the bulls are not afraid that, oh my gosh, it's reversing down and we overextended ourselves, we better get out. There's not that sense here. This is not climactic buying, and because there's not climactic buying, there's less probability that we're going to get a reversal down out of this. More likely, we've had 5 doji bars today. More likely, we'll probably go mostly sideways here. All right, so what do you do with bar 6? It's a failed sell signal. We have a sell signal, a failed breakout above yesterday's high, second entry short below 5. Theoretically, it's still short, stop above 5. However, the bears are upset that we did not sell off. And the reason we did not sell off is what I said. There's no energy. We have 5 doji bars, so there's no sense that the bulls have gone too far and they're panicking and they have to sell out. Nobody wants to do anything right here. The market is just going sideways. The bulls don't want to buy this high up. If we go sideways and the moving average goes up here, then sideways to the moving average, the bulls will be more interested in buying. And for the bears, they need a strong reversal down. But even if they get it after a bull channel as tight as this, the reversal down will probably be minor and the bulls will probably buy it. Maybe a 50% pullback, maybe a test of this high. All right, so for the bulls, it's now a high 2 buy, but 6 dojis. So I think best choice is flat and wait to see what happens once we get closer to the average price, either by going sideways or by going down. Now, it's a third reversal down below 7 or below 6. And as long as we don't go above 5, we're still on the sell below 5. But 6 dojis, not a very good environment for stop entry trading. Everyone wants a swing trade, but the math here is bad. good location for the bears, but a lack of climactic buying, and therefore lower probability sell, and probably buyers below at the 2 moving averages. Always in long or short. You have the sell signal below 5 and the buy signal above 6. Unless the stop above 5 gets hit, I think the bears have a slight advantage. 6 doji bars in a tight trading range, it's about 50-50, but I think it's slightly more bearish than bullish. 8 doji bars in a very tight range. It's a limit order market, but the range I think is too tight to trade right now. And stop order bulls bought above 6, I think not good. Buying above 8, not good. Selling below 2, selling below 5, not all that good. If we break above 5, what happens? And that's where the stop for the bears is. We have that magnet up here. Next magnet is this lower high ledge, and I think we'll probably get there today. Potential for a breakout above 5 and then a brief move up to that next support, next resistance level. $60-minute chart, the all-time high is, I think, the next significant resistance after this lower high. Bears trying to keep the market from going above the 5 high, but I think we're pretty neutral. I think it's more likely that we're going higher. I therefore think we're always in long, but I'm neutral and I'm currently flat. The math is simply bad trading here. You could buy at the market and put a stop below 7 and look for a reward twice as big as your risk. That math is okay. You could sell here at the market and put a stop above 5, going for maybe a measured move down, 2 or 3 points down. The math is probably okay for that as well. Even if there's only a 30% chance your stop will not get hit, at this point, if you sell here, you're risking 1 point and you're probably trying to make 3 or 4 points. Worst case is break even. However, if you're risking 1 point to make 3 points and you have a 30% bet, that's basically a break-even trade. So you really need 4 or 5 points to make it worthwhile. I would rather wait to see a strong bear breakout and then sell and try to make 1 or 2 points, because it's higher probability. It's a higher probability trade, and when the probability is higher, it's easier to make money. And the same is true for the bulls. I'd rather see a strong bull breakout and then buy, because the probability will be higher, and the reward will be less, and I'd rather take the smaller reward and have the higher probability. Tight trading range late in a bull trend usually becomes the final bull flag, and therefore even if we do break out to the upside here, we're probably not going to go all that far up. Next target, here's the 15-minute chart. Next target is this lower high, this ledge. That's a pretty strong magnet, so I think we will get there. So I think it's more likely than not that we'll go up at least a little bit. The Globex 15-minute chart, and we've had about 9 or 10 bars without a bear body. Even though the rally lacks big consecutive bull bars, that absence of bear bars makes a reversal down minor. We're near the end of the first hour, bar 11, and so far a bull bar, but at the resistance of this lower high. At this price, we went sideways in a tight range. We could do that again today. Best choice right here, I think, is just wait for the breakout and see what it looks like. If it looks strong, trade in the direction of it. If it looks weak, look for a reversal. Bears still on that short below 5. I gave several examples where you had the second entry short and the market went sideways and then ultimately down. I think it's really 50-50 at this point. However, sometimes that's what happens. Here we had a second entry short and it continued sideways for about 18 bars before we got a breakout. Lots of reversals in here. Right. So is it a sell here? Well, maybe. Is it a buy above here or above here? Well, maybe. You sell again here. Lots of reversals make it really difficult to trade. Theoretically, you'd sell below here, put a stop up here, or you sell below here and stop up here. High to buy, a high to buy. You buy here, you sell here. So you have to make 2 or 3 trades where you make or lose 1 or 2 ticks before you get a swing down. Higher probability to wait until you get the breakout. So higher probability to wait until you get that or that, and then sell for a second leg down after a rally. And the breakout could go either way. It could go up, it could go down. That's the end of the first hour. Tight trading range, so you'd expect a doji, which we have. Not a good looking sell signal bar, but not a good looking follow through bar after this reversal up. So we may end up having another one of those extremely quiet days. The bears need big bars. This is good for the bears. They have 2 bear bars working on a third, and they're trying to get a bigger bar. 6 ticks below 5, so some bears will scalp up part for 1 point, disappointed by all the dojis that followed their sell signal bar. Bulls are hoping that the market goes sideways at the moving average, and then they'll look to buy. Remember I said last week was a sell signal bar on the weekly chart, and that a lot of times the sell signal will trigger, like it did yesterday over here. The market reverses back above the sell signal, and then the market tries to trigger it again. And the bears are hoping that this again falls below last week's low. And they hope that if it does not reverse up again. They want it to fall below last week's low and keep going down. Might get 3 consecutive bear bars. So far, none of the bars is big, and we're at support, 2 moving averages. But is it good enough for the bears to get a second leg down? I don't know. It would be better if the bars were big and closing on their lows. Bears are trying to get a big bar here, but 1 minute left and it's not especially big. So it's not attracting a lot of sellers, sell the close type bears, sell the market type bears. It looks like some traders are waiting to see how it closes. Will it have a 2 or 3 tick tail, in which case traders will not sell, or will it close on its low and even get 2 or 3 ticks bigger than it is now, in which case traders would be more willing to sell. What about the swing bears who sold below 5? Well, they're still short. And because they're short, other traders can sell for a swing right here. Obviously, they will make less profit than the bears who sold below 5, but it's still the same trade. Every time you enter a trade, if it starts to go your way, you basically mark it to the market. You don't think about your entry price. You just think about the current price. And therefore, it doesn't matter if you sold below 5 or if you sold right here. The stop is the same and your goal is the same. Okay, so good bar for the bears. Probably sellers above. 2 legs down, 6 and then down here. But unless there's a pretty good reversal, we'll probably have at least a small second leg down. We have a breakout point, the 7 low, not that far above. The bulls want to get above the 7 low. That would reduce the bearishness of this. And the bears will try to keep 14 from getting above the 7 low. They want to get a gap, and then they hope this is the start of a swing down. I am not, it's obviously always in short, but it's not strongly bearish. The low of the first hour is the 1 low. Not a good looking sell signal, especially after 2 good bull bars, and therefore probably buyers below the low of the first hour. So probably buyers below the low of 1. Because it's not clear, you'll have some bulls buying the close. However, when the market reverses down or breaks out, especially on the open, and you get 3 consecutive bear bars closing at or near their lows, I usually do not buy that close. If anything, I either sell the close or I wait, and I did not sell the close, so right now I am currently flat. The hesitation is because some traders are betting on the trading range, and therefore they buy a strong bear close. And other traders are betting on a reversal down, and therefore they sell the bear close. When a channel up is tight like this, the reversal down usually is minor, unless you start to get big consecutive bear bars. We have consecutive bear bars, but they're just not all that big. So a lot of hesitation here. Here, 3 decent sized bear bars. We got a second leg down. Today we have 3 bear bars, but they're not relatively big like that. 3 big bear bars, second leg down. 3 decent bear bars, and look at the size of the reversal up all the way to the top of the sell climax. Double top bear flag, swing down. 4 or 5 bear bars, deep pullback. So traders, a lot of the bears are waiting for a pullback, and they'll sell the pullback. So this is not so far looking like a strong sell to close day. Here, a couple bear bars, a little bit down. On all of these sell-offs, it's bear channels, big bounce. They're not leading to huge bear trends. Relentless bear channel. A couple legs down, and then low of the day. When you look at it, if you think of it from a bearish perspective, you're frustrated. You're saying, it's down, but it's not really as strong as I want. I'm worried that we may be in a trading range, and I don't want to be selling at the bottom of the trading range. And that is a valid concern. So always in short, but there are several things wrong with this. We had a lot of doji bars here, unlikely to lead to a big trend. We're at 2 moving averages and the low of the day. So support. Bear bar's not all that big. Bad follow through bar on bar 14. So while this could end up as a big bear trend, it does not look like it. Very tight bull channel yesterday, unlikely to be a big bear trend today. More likely, if we sell off, there'll be buyers at support, 60-minute moving average, low of last week, this breakout point high, this breakout point high. Buy or sell, 14 high. It's a big high too, 2 legs down, 7 and 13, but tail on top, 3 consecutive bear bars, probably not a very good buy. Probably sellers above, or sellers 1 point above, up near the 11 high. Low one short, but 2 consecutive bull bars and a lot of limit order trading. A lot of the bears who sold the 14 high also will scalp out for 1 point. They need a 5-tick drop, which they've already had. Since it's a weak sell, can you buy at the 15 low? I would not. We still have the low of the day and the 60-minute moving average below. And then, we may have to test all the way back down for last week's low again. So I think we're always in short. I'd rather be selling, but I'm also scalping. We're getting near the low of the first hour, the 60-minute low, but not a good sell signal bar, especially after 2 big bull bars and a bull body on that doji. So probably buyers somewhere below the first hour's low. And obvious support, the breakout point here or here, and last week's low. By the way, on fast money yesterday, you know how I shorted last week when the market was above 2,500. 2 traders on fast money yesterday said that they shorted yesterday as well. So I thought that was interesting. Or they shorted yesterday. I shorted last week. Bulls want bad follow through again. Wedge bull flag, 3 legs down, 7, 13. The bears want a gap. They have a gap. 15 low, and it's a negative gap with the 7 low, 1 tick overlap, but that's still bearish. Now, the bears are trying to create another gap here, 17 high, 14 low. If a sell-off is weak, this one is weak, but it forms gaps. There's an increased chance that it could be a small pullback bear trend and last a long time. More likely, this is not going to go down all that far. We have a very tight bull channel. The reversal is probably minor, which means a trading range. The market is now trying to find the bottom of the range. The bulls are hoping for a failed breakout below the low of the day and a wedge bull flag, 1 pullback, 2 pullback, 3. Some bulls bought the 16 close. Others will buy above 17 for the opening reversal up. But now we have a fairly tight bear channel and not a lot of energy up or down. So even if 17 closes on its high, not particularly strong buy setup. So a lot of traders will wait to see if we break strongly to the upside and then buy. Limit order traders are buying below bars. They buy below 8, buy more 1 point lower. Buy below 14, buy more 1 point lower. And not a lot of bears selling the breakouts. Bears are preferring to sell rallies because they think of it as either a channel, in which case they prefer to sell high, or a trading range, in which case they also prefer to sell high. And bulls are treating it like a channel as well. They're buying below prior lows. This is important right here. Will we go 1 tick above 14 or 2 ticks above 14? If we go 2 ticks above 14, then I no longer consider it a negative gap. It's more likely a reversal or the end of the sell-off and the beginning of a trading range. We went 1 tick above 8, so it's a negative gap. But if you start to go 2 or 3 ticks above, then the chance of a small pullback bear trend goes down substantially. The bulls want an opening reversal up from the 60-minute moving average, so a wedge pullback, 7, 13, 16. The bear bars are closing on their lows, and the bodies are decent size relative to the bull bodies, and that makes buying above 16 a low probability buy. So probably the best the bulls can get over the next few bars is a trading range, and the bears want the sell-off to continue. Again, we went one tick above the 14 low. If we get above 16, if we get above 17, that would make it 2 ticks above the 14 low, and it would increase the chances that we would start to go sideways. You can see the bears are trying to stop it from getting 2 ticks above the 14 low. So now they have 2 negative gaps, the gap below 7 and the gap below 14, and the bulls want to close these gaps. Not a lot of bears willing to sell down here despite the gaps. Bad follow through after 7, 13, 16, and at support. So too much risk of buyers below bars, below 14, below 17. The bears have not yet done enough to convince traders that we're going a lot lower. Right now, I think this is probably a bear leg in a trading range, just like on the way up, I said there's probably a bull leg in a trading range. And the market's simply deciding where the bottom of the range is. It's probing to find out where the bears will stop and where the bulls will get aggressive. We're at a good location, and we've had 3 pushes down, so this is a potential bottom. But if we get a gap, then we'll probably get a measured move down and a couple legs down. So we're trying to get a wedge bottom here. If we break to the downside, probably a couple legs down. Important bar, at support, wedge bottom. Will we reverse or get the breakout? On those reversals down from yesterday's high, and most of them are followed by reversals up. Normally they do not lead to huge bear trend days. Sometimes they do, but most eventually stabilize, and then you get a leg up. This is an example of one where the market trended down all day. Couple legs down, stabilized. Another one that lasted all day, down for a couple of hours, and then a reversal. $17 ticks below 5. You'll have some bears looking to take partial profits right here at 4 points. What happens if we go below last week's low again and trigger the sell on the weekly chart? I don't know. I said yesterday that even though we went below last week's low and reversed up, we still have three days left to the week now, or 3.5 days left to the week. We could still reverse all the way down here to the low of the bull bar from 2 weeks ago. We still have enough time to get down there. Bad follow through, bear bar bull, bear bar bull, bear bull, bear, right? And because of that, the sell-off will probably end up as part of a trading range. Excuse me. So far, limit order bulls 17 low are trapped, but because of the bad follow through, I think the odds are they'll be able to avoid a loss. And for the bears, what happens if they start to get big bear bars closing on their lows? Well, it would be more bearish, but right now, this is probably going to end up as a bear leg in the trading range. and the next important magnet is last week's low. So a lot of traders are not buying until we get there. They want to see what happens if we collapse below it. Then today could be a big bear trend day, but more likely we'll find support around where we are or a little bit lower, and then start to go sideways. Tight bear channel, unlikely to become big bull trend. We're around a 50% pullback of yesterday's rally. So support there, support last week's low, support at the breakout point here and here, support 15-minute moving average. There are still limit order bulls buying below bars, buying below 17, buying more 1 point lower, and the bears are hoping to keep the gap open. The bears were unable to keep the gap open below 7, unable to keep the gap open below 14, but both times the overlap was only a single tick, and that means this still could be a small pullback bear trend day, and it could last all day. The odds are against it. More likely bear leg and a shredding range, and we'll start to go sideways soon. Now, what about a stop entry bull? I think he needs a wide stop, very tight channel, magnet below, so we may go a little bit lower. Terrible bar for the bears, and again we're right back at the breakout point, 17 low. So not behaving like a small pullback bear trend, and therefore probably a bear leg in what will end up as a trading range. For the bulls, you can argue wedge 1, 2, 3, but very tight bear channel. So probably the first reversal will be minor, and we'll probably have to go sideways for several bars, like this. The bad follow through makes a lot of bears not want to sell new lows, even though we're still getting negative gaps and gaps, and we still could be in a small pullback bear trend. It's more likely a bear leg in a trading range, and the bears would rather sell rallies. A pullback in a bear trend, a bear inside bar, but probably not a lot of bears selling below 20. Again, we're right at last week's low. We broke strongly below it, reversed up strongly, and so theoretically it's support. We broke strongly below it, resistance, broke strongly above it, and now pulling back to it. What happens if we get a huge bear bar here? Well, then we'll probably have a big bear trend day, right? But more likely we're around a 50% pullback, and we're testing the breakout point, 51 high, and the sell-off has bad follow-through after decent bear bars, and therefore this is probably going to evolve into a trading range soon. We're at support, and the sell-off is not all that strong. Yesterday I said it was a buy above 20, but I said it was probably a minor reversal because the channel down was tight. And that is the same here. Very tight channel. First reversal up probably minor. The bulls will probably need a double bottom. And the bears really need a strong breakout. We have a weak sell-off. So it's probably a bear leg in a trading range. But to convince traders that this is going to be a small pullback bear trend day, maybe try to get outside down below yesterday's low, they need a big bear breakout. More likely not going to happen. More likely we're going to bounce here or soon and then start to go sideways for 5 or 10 bars. Not a strong stop entry buy above 21 unless you're using a fairly wide stop, maybe all the way down here. Not a good looking buy signal bar. Tight bear channel. Magnet a little bit below last week's low and the 51 high. So even if we do go above 21, probably sellers above, and we'll probably go at least a little bit lower. Difficult to do anything right here. It's not strong enough to sell at the low, but the channel is tight enough, so a lot of the bulls want to see it go sideways for a few bars and form a micro double bottom before buying. Will traders sell the 21 low? I would not. It looks like a bare leg in a trading range, and I'd rather sell higher. And for the bulls, limit order bulls they buy below everything. So they bought below 19, they bought below 20. It needs to bounce a couple more ticks for them to make money. And you still have limit order bulls who bought the 17 low, bought more 1 point lower, 2 points lower. They need to get above the 17 low. They probably will make money. I don't know if they'll make it on the next few bars, but because it looks like a bare leg in a trading range, we'll probably get a bull leg in a trading range, and limit order bulls will probably make money. So we'll probably get above the 14 low, above the 17 low. Several ticks above the 19 low. So again, the bears are unable to get gaps. They have a gap 17 low and 19 high. So a possible measure to move down. Limit order bulls made money buying below 20 and below 19. So that's the first sign that we're probably transitioning into a trading range. For the bulls, a 50% pullback, a tight channel, a bear channel, bull flag. So bull trend, bear channel, bull flag. But channel is tight, so the bulls will probably need a micro double bottom before they can test up to maybe the top up here. Low one short, like 15, but weak sell-off, and limit order bulls made money below 18, support below last week's low and 51 high. So probably buyers below 23 and below 21. And just like the market sold off strongly to test the August high twice yesterday, reversed up, we're selling off, not strongly, but we're selling off, testing last week's low again and the breakout point from yesterday. And the bulls are trying to get a reversal up here. This is bar 24, the end of the second hour. For the bulls, it's a breakout of a bull flag, a bear channel, and this is simply a pullback from that breakout. And for the bears, it's a double top bear flag. They want to break below the neckline and a measured move down. It's more likely going to be a pullback. So the bull case is stronger, even though we have a reversal up and then down. The reversal down is not as strong as the bull breakout of the bull flag. And therefore, it's more likely buyers around where we are. We're right near critical support, last week's low and the 51 high. The bears want this. They want to collapse below support, and the bulls want a bottom. Because the sell-off is not very strong, I think it's more likely that we're going to bounce that support. But you have to keep open the possibility that we collapse like bar 17 yesterday. Okay, this again is falling below last week's low, so it's again triggering the weekly sell signal. I talked about that yesterday, that we could fall strongly below last week's low, trigger the sell signal on the weekly chart, and then rally back above the sell signal, last week's low, and then later, a day or two later, again break below last week's low, triggering the sell signal a second time. And that's what's happening here. Small chance today could be outside down. I say small because yesterday was a big day, and therefore it's less likely that today will be even bigger and go outside down. And that means that the odds are whatever sell-off we get is probably going to form a higher low and not fall below yesterday's low. Bears trying for a bear breakout below the bear channel. 75% chance it fails within 5 bars. 25% chance it's the start of a new swing down. Order bulls, 21 low, right now are worried. Bulls are hoping that 24 is like 19 yesterday, an exhaustive sell climax and the end of the sell-off. Location good. We're testing the support, 51 high, low of last week. And the sell-off not all that strong. But the bulls need a reversal. Bears, I'm not willing to sell a bear breakout below a bear channel. So I'm not selling down here. I have not yet bought, but I'm looking to buy. Another gap, 21. Limit order bulls bought the 21 low, 1 point lower and 2 points lower. Probably an exhaustive sell climax. The biggest bear bar, or one of the biggest bear bars, certainly 20 bars into a bear trend and at support, but very tight bear channel, so unlikely to go straight up. And if we do reverse up here, we'll probably have to get a double bottom, 10 bars from now or so. As I said, I think we're probably not going down much further. We're probably bottoming around where we are or a little bit lower. Less likely we'll continue down to below yesterday's low and become an outside down day. Okay, limit order bulls made money, right? And they made money below 8 and below 19 as well. So that reduces the chances that this is going to be a relentless bear trend that gets down below yesterday's low, and it increases the chances that we're going to start to stabilize here. Either go up a little bit and then down and form a trading range, or simply go sideways and form a trading range. Because bulls are now starting to make money buying below bars, they'll look to buy below bull flags. For the bears, 25 is a pullback in a bear trend, so it's a small bull flag, and bulls probably will buy the 25 low. And the bears see the same things, and they achieved their goal. They broke back below last week's low and below the breakout point, 51 high, and they see the sell-off is a series of bear bars followed by bull bars, and therefore unlikely to last much longer. At some point, the bears will wait to sell higher, and I think we might be at that point now. Also, if the day is a trading range day, it usually tries to reverse at the end of the second hour, which is right now, and if it fails, it then tries to reverse around the end of the third hour. So legs in trading range days typically last 2 hours or 3 hours. And some of the legs are simply sideways. For example, here yesterday, we went sideways for a couple of hours. Stop order bulls, will they buy? Well, stop order bulls have not made money since bar 1, and this channel is tight. I think they're only buying if they're using a very wide stop, maybe below 24, maybe below yesterday's low. So not a great stop order buy, but context, I think, good for the bulls. 50% pullback, test of key support, and a sell climax 24, and a weak sell-off. Similar to 1920 yesterday, there we had a parabolic wedge sell-off, and I thought it was a reasonable buy above 20. And here, we've had so many small bars today that a lot of bulls, are hesitant to buy above bars. I think it's okay to buy, right? But minimum stop below 24. If a bull gets stopped out below 24, he's going to buy again on a reversal up because he's pretty confident that the sell-off will end up as part of a trading range and not a relentless bear trend. So what about the bears? I would get out above 25 and wait several bars before thinking about selling again. The bears achieved their goal. They broke below last week's low again. They broke strongly below it, but then the market reversed up. The bears bought back their shorts, and the bulls had limit orders waiting to buy. Because the pullbacks in the bear trend have been small, a lot of the bulls do not want to buy this high up, because all the rallies have been small. And this is a bigger rally. Buying up here requires it to become even a bigger reversal for the bulls to make money. And therefore, a lot of the bulls are hesitant to buy up here. And for the bears, they have a double top, 23, 25, but we reversed up fairly strongly at key support, last week's low, and the breakout point, 51 high. And a lot of the bears do not want to sell unless they wait several bars. They want to give the bulls a chance to reverse the market. If they conclude the bulls are failing, then the bears will sell again. Probably buyers below 25, buyers below 26, and probably sideways here. As for buyers above, I think you're only buying above if you can use the wide stop, because sideways is more likely than a strong reversal up. Bears double top 23, but probably buyers below 26. When you get double top bear flags like this and the sell-off is not all that strong, the odds are you're not going to break below the neckline and fall for a measured move down. More likely you're going to go sideways. Double top bear flag, fell for a measured move down. The sell-off before the double top bear flag was strong. Double top bear flag here, did not fall very far, and here, and went up a little bit. Ultimately it went down, but initially it failed. Double top bear flag, we got a higher low major trend reversal. Double top bear flag, a lot of hesitation on the way down, and we got a higher low major trend reversal. For the bears, double top bear flag, swing short only, since more likely buyers below 26 or 27. And for the bulls, very tight bull channel, 25, and I think you're only buying it if you're using a stop below 24 or a wide stop, and you have to be willing to allow for pullbacks, because a tight bear channel, when it has a reversal, it's usually minor, which means a trading range, and the trading range could be tight. We could simply go sideways here. It might bounce a little bit, but it may also simply be tight. I don't know if it'll be like this, but we're probably going sideways here, which means limit order market. Sellers above things, buyers below things, and then sideways for a number of bars. Still always in short, but only 40% chance the double top bear flag will break below the neckline and fall for a measured move down. when you have these double top bear flags like this, sometimes the rally is very strong, and the reversal down never looks all that strong. We have three dojis. We have a bull bar trying to form a higher low. We have another bull bar here trying to get a double bottom or a slightly lower low reversal. High three, 1, 2, 3. Yet it just keeps falling. That's a perfect double bottom there. Starting to get small bars like up here, so probably starting to enter a tight trading range again. Whenever you have a sell climax like this, we have a bear breakout below a bear channel, the market usually goes sideways rather than reverses. Most reversals lead to trading ranges and not opposite trends. We had a sell climax and a reversal, and that led to a trading range. Once the market's in a trading range, the bears have sell signals, typically some kind of a double top, and the bulls have buy signals like a double bottom or a higher low major trend reversal, another higher low major trend reversal, and eventually one side wins. And this is the same thing, sell climax, probably sideways here, and the bulls will have buy signals like buying below bars, below 27, below 26, below 25, and the bears will have sell signals. They have a double top bear flag. They may get a wedge, 3 pushes up, 1 pull back, 2 pull back, 3, and then the market's in breakout mode. Are we always in long yet? No, I think the bulls need to do a little bit more. However, as I said, for the bears, the next target really is yesterday's low, maybe the 62 low, and yesterday was a big day. It makes it unlikely that today is going to go upside down, which would require an even bigger day, and that's unlikely when the market is having a lot of reversals. And therefore, we're probably not going below yesterday's low. Probably in a limit order market. Bulls buying below things, scaling in 1, 2 points lower, and bears selling above things. They sold above the 23 high, and they'll probably scale in higher. And both bulls and bears probably will make money because we're probably in a trading range. For the bulls, a small head and shoulders bottom, but a bunch of dojis here, so probably more of a limit order market than a stop order market. For the bears, they had a bear ILI 29, but 4 dojis and a decent reversal. Not a lot of bears willing to sell with a stop below 29. Probably 1 point scalping here, buying with limit orders below things, selling with limit orders above things. The market is deciding whether this is the low of the day and the start of a channel up, or whether instead we'll go sideways. I think we're probably going to go sideways more bars, but I'd rather be buying below things than selling at least for a few more bars. If we go sideways and get a wedge, 1, 2, and then 3, then I might sell again. And obviously if we collapse, I would sell closes, but I still think the odds are against today falling below yesterday's low, because that would require a very, very big day. And when you're in a tight range like we are on the daily chart, that would be very unusual to have today be an outside day after yesterday was such a big day. Bears want a wedge, 3 pushes up, 22, 28, and 32. And the bulls were hoping that after a bear leg in a probable trading range day, they've now begun a bull leg in a trading range day. And the market's deciding where the top of the trading range is. Is it going to reverse all the way up here? Are we going to sell off and get a new low? Or are we going to go sideways and then later in the day decide between trend reversal up and trend resumption down? Because of all the trading range trading, and because we're at key resistance, 60-minute moving average, and key support, low of last week, I think we're probably going to go sideways, maybe for a couple of hours, and then later in the day decide between trend resumption and trend reversal. Sell-off trading range, trend reversal down. Sell-off trading range, trend resumption down. This is sell-off trading range, trend resumption down. Again, trend resumption down. Sell-off trading range, slight upward slope to it. Sell-off trading range, trend resumption down. Rally trading range, trend resumption up. Here, sell-off trading range, trend reversal up. Here, rally trading range, trend reversal down. So once you're in a trading range, 20 to 30 bars, the odds of a bear breakout are about the same as a bull breakout, whether or not before the trading range we had a rally or a sell-off. In general, I always think it's slightly more likely to go in the direction of the trend that led to the trading range, but it's really very close to 50-50. So bull trend, probably a bull flag, less likely a bull flag. Now a trading range, at some point the probability of the bull breakout and the resumption of the bull trend falls to the same as the probability of a bear breakout and a reversal. But today is similar to this, a sell-off and a trading range. This day we got a reversal up and 50-50 chance instead we get a second leg down, one pullback, two. Limit order bears selling. Stop order bears, it's a wedge. 3 pushes up, 22, 28, but it's probably better for limit order traders buying below things and selling above things, selling at the 28 high and using a wide stop, maybe above 15, maybe above the high of the day, maybe above 9, and scaling in higher. Fairly tight bull channel, and that will discourage bears from selling with a stop below 31, despite the wedge bear flag. But if it closes on its low, a lot of bulls will not buy there either. It's similar to this reversal up. A lot of the bulls will buy the first reversal down after a decent reversal up, 3 bull bars. First reversal up, not a good sell signal bar. A lot of bulls will buy that low. And if the reversal up is strong enough, they'll buy the low 2, low 1, low 2. However, if you get a pretty decent bear bar, they'll hesitate to buy. And the bears know that, and they are trying to make 32 a good bear bar. They're trying to discourage bulls from buying this high up. They don't mind the bulls buying down here because then the bears selling up here can make money. But if the bulls buy that 32 low, the bears selling for any reason will have a very difficult time making money if the bulls are buying just a little bit below. I think the picture looks confusing, and I think we're probably going to be sideways for a couple of hours. Whenever you look at the thing and you say, well, I can see a bear case, I can see a bull case, but I don't have strong feelings either way. That's telling you that you believe the market's in our trading range. The bulls do not want the limit order bears to make money. The bears sold the 28 high, unable to sell more 1 point higher. And so these bears are deciding, do I just get out break even, or do I hold hoping that it falls 5 ticks from my entry price so that I can make money? a lot of the bears who sold that 28 high did not like the bull breakout 31. They did not like unable to sell more, and they do not like that the range is getting small and the math is not all that good to bet that it's going to fall 5 ticks below that 28 high. So a lot of the bears will buy back their shorts here, and that increases the chances that we'll go at least a little higher. It's too high up in a weak rally for me to buy again. I did buy, actually I bought the 26 low instead of the 27 low. I thought we would pull back further. Since a trading range, you'd expect deeper pullbacks and you expect more disappointment and you expect support to not hold. I could have placed a limit order to buy the 25 low, but I thought, we would not pull back that far before we would try to resume up. Sometimes when I place a limit order to buy a little bit lower and not the first low, I do not get filled. It'll form a double bottom and then go up, and then I have to buy higher. I still think probably buyers below 32. I would not sell at the stop, but I don't want to buy a low 2 at resistance, 60-minute moving average at the bottom of a bear bar. So right now I have to wait 2 or 3 bars to see what we get. Small sideways bars. I showed you in a lot of those examples when we had failed breakout yesterday's high and second entry short, that they typically do not result in big bear trends. Typically it ends up in a trading range. So here, second entry short, trading range today, we've got a reversal. This is an example of one where we had a bear trend. Here, trading range. Here, a couple legs down. This is, I think, stronger than today. Today, we have bear bars followed by bull bars. Here, got a trend down. But here, sell-off, trading range. This is probably like today. Sell-off, bull channel, but mostly sideways. Here, reversal. I don't think we'll get that. I think more likely this is going to be pretty much like today. Just getting their breakout. It's a wedge, 1, 2, 3. Anytime you have a double top and a breakout, you have 3 pushes up, 1, 2, and then the breakout 3. For the bulls, they want a higher low. I am neutral. I think we're probably going to be sideways here. Similar to yesterday, but a smaller version. Strong sell-off, strong reversal. Strong sell-off, strong reversal. Strong sell-off, medium sell-off, medium reversal. And then medium sell-off, medium reversal. This is actually a pretty good bar for the bulls, and it increases the chances that we're going to get back to the open of the day, maybe the high of the day. Most reversal days do not become strong bull trends. Normally, they have a hard time getting above the high of the day, or if they get above the high of the day, they do not get much above the high of the day. Big reversal all day long, did not get above the high. This is yesterday, reversal did not get above the high. Reversal did not get above the high, even though we reversed up strongly. Reversal up strongly, and did not get above the high. Strong reversal up, got a little bit above the high, but not much higher. Strong reversal up, did not get above the high. And we are trying to reverse up, and unlikely to become a strong bull trend. I still think, like I said from early on, today would probably be a trading range day. We had a bear leg, and we're currently in a bull leg. Legs in trading range days usually are 2 to 3 hours. We have down for a couple of hours, and now we're probably sideways or up for a couple of hours. Can you sell the 32 high? I think 36 is enough of a surprise. So it's probably better not to sell the 32 high. It's better to wait a bar or two to see if we get a strong bull breakout here. It's a clearer wedge. So different ways to do it. You can help 1, 2, 3 or 1, 2, 3, 4. But I think really confusing, and stop entries are dangerous. Buying above 36. I say that, the bulls made money buying above 35. The bears made money selling below 32. But, the bulls did not make money above 30. Bears did not make money below 27. I think too confusing limit order market, and I did not sell the 32 high. So right now I'm trapped out. Probably buyers below 36, but I think a pretty dangerous market to trade. 60-minute chart, 3 sideways bars. We had sideways bars here, a reversal here, sideways here. The bulls want head and shoulders bottom, left shoulder head, right shoulder. The bears want double top bear flag, break below the neckline, measure move down. Most likely more sideways bars. Limit order bulls probably buying 36 low and probably buying 24 low as well. Limit order bears probably scalping, sell above 32. Bears are hoping for trend resumption down, leg 1, pullback, leg 2, but a lot of dojis and a lot of reversals, so more likely sideways here. For the bulls, a pullback from the 36 breakout. Sometimes pullbacks like this, 37, fall below the breakout point, 36, low, and they're still acceptable pullbacks. So this is still a bull flag from this brief bull trend. A strong bull reversal. Strong bull reversal, bear trend resumption down. I view this as a bull flag, a pullback from the strong bull reversal. It does not look strong enough to be a bear trend, and therefore it's simply a pullback from this bull reversal, even though it fell below the low of the bull trend. And sometimes that happens. Sometimes the pullback goes below the breakout, and it's still simply a pullback. Another example, strong reversal up from yesterday's low and reversal attempt down, but I see this more as a pullback from this breakout, even though the pullback fell below the bottom of the breakout. We had a similar thing on the daily chart, if I remember, on AT&T recently. Strong rally, bears tried to get a reversal, but this is more of a wedge bull flag, 3 legs, 1, 2, 3, and a pullback of this breakout, even though it fell below the bottom of the breakout. Are we always in long or short? I think we're probably always in long from the reversal, but as I've been saying, I think we're probably going sideways here. Still slightly more bullish than bearish. As I said, I think 38 is a pullback from the 36 reversal, but not a lot of bulls willing to buy up here. And the range is fairly tight. Today will probably be another doji day, which means it'll probably close around the open. Yesterday we closed slightly above the open. I don't know if today will close above the open. I don't know if today will close above yesterday's high. Yesterday's a buy signal. a 4-bar pullback, a 3-bar pullback, and a bull trend. Hours ago, I said the 14 low bulls and the 16 low bulls would probably make money, but it might take a couple hours to get there. That's where we're going here. Open of the day. Right now it looks like we'll get to it. Again, when you get these reversal days where the market goes one way and then the opposite way, if the sell-off lasts a lot of bars, a couple hours, and covers a lot of points, the reversal usually has a hard time going much above the top of the sell-off. Sometimes you'll go a little bit above, but usually the reversal fails to go much above. It usually stalls around the top. If the sell-off is brief, just a few bars, and not very far down in terms of points, you often get a reversal that leads to a huge bull trend. You know, today is one of the days where the sell-off lasts a lot of bars, 20 bars, and falls a lot of points. And that makes it more likely that the reversal up will have a hard time getting much above yesterday's high, if we get above yesterday's high. Not a lot of bulls willing to buy the breakout, even though magnets above, open of the day, high of the day. But bears think it's always in long, and they're aware of the magnets above as well, and therefore they're hesitant to sell until we test above the magnets. Just like the bulls did not buy until we tested below the magnet, below the low of the week. When you have a lot of trading range price action, the market usually has to go below support before it can go up. It usually has to go above resistance, like yesterday's high, before it'll go down. And we have resistance, open of the day, high of the day. So we're probably going at least a little higher. Remember I said trading range day, typically the legs are 2 to 3 hours long. You know, we sold off for about a couple of hours. We've been rallying for about a couple of hours. Anyone going to sell below 46? I would not. You can argue that the bears made money selling below 32 and 37, but we're starting to get a lot of bull bars here. We have a 7-bar bull micro channel, and the bears probably will need a micro double top. Math is not so simple for the sell. You know, you can call it a wedge, you can call it an expanding triangle, but we're right next to the target, open of the day. Also, we're a little bit early getting there. Normally, I'd expect it to get there 11 o'clock, 11:30. So, not a great stop order short. Limit order short, the bears will probably make money. I'm less certain about the stop order bears, but I think a lot of limit order bulls will not buy this high up in a channel that's not very strong. Micro double top right at resistance, open of the day in a wedge, but small pullback bull trend for the past hour. That lowers the probability for the stop entry bears. Limit order bears selling the 37 high probably will make money. If we get up to the high of the day, probably sellers there, because too many bars and too many points in the initial sell-off. When you get a reversal day after a relatively big sell-off like this, usually the market has a hard time getting much above the high of the day. So we're in the sell zone now between the open of the day and to just above the high of the day, but a small pullback bull trend, so no urgency to sell. And a lot of bulls will not buy up here. They'll buy a pullback maybe, but they'll probably not buy new highs. Bears will start selling above highs, bidding against big breakouts. 2,500, big round number, just a little bit above. I don't know that we'll get there. I don't know that we'll get above the high of the day, but I think we're in the sell zone. I often get trapped out of trades. Here's the 5-minute euro bear trend, tried to bottom here from a lower low major trend reversal, double bottom, decent buy signal mark, and we collapsed. And now we're reversing up from the final flag. You can also call it a lower low major trend reversal. I didn't notice it until this point, and I tried to place a limit. I did place a limit order to buy at the low of that bar, and I did not get filled. And on this chart, the TradeStation chart, it traded below, but I'm assuming that on my broker's chart, it did not trade below. So I did not get filled, and I missed that scalp. Testing the bear breakout high. Still a bull leg, probably in a trading range. Probably will close the day around the open. Tight channel. Hard for the bears to make money because the pullbacks are all small. However, the bears who are selling up here probably will make money because a trading range is more likely than a bull trend, even though we've been trending up for 2 hours. Strong reversal up, failing just below the high of the day. Strong reversal up, did not get to the high of the day. Strong reversal up, did not get to the high of the day. Strong reversal up, did not get to the high. Only got a little bit above the high, even though strong reversal. Did not get to the high. Did not get to the high. Again, this is what I talked about earlier. If the initial sell-off is small and does not last too many bars, and then you get a reversal, you can get a big bull trend going far above the high. That is not the case today. Today is like all of these other days where the sell-off lasted a couple of hours and had a lot of bars, and then the reversal up failed to get much above the high. While it's possible that it can get a lot above the high, it usually does not, and therefore it's unlikely that we're going to go much above where we are. Limit order bears who sold at the open probably will make money. They don't need much more to make money. Fairly tight bull channel, so more of a limit order short for bears. Tight enough bull channel, so the reversal probably will be minor, which means we'll probably go sideways here. It's getting late in the day. We still have a couple hours left, but we're probably not going to go very far from the open of the day, and the day will probably end up as another doji bar on the daily chart. So traders will be looking to buy a point or two or three below the open around the 60-minute moving average and sell above prior highs and scalping. Can this be bull channel bear flag and result in leg one, leg two down, leg one pullback, leg two? I think the bears need to do more. More likely it's a minor reversal and we'll go sideways here. I think most of the bears who sold up here will be scalping. I want to check something here. Remember I said that we're not going below yesterday's low. So that means a bear who is selling, let's say he sold the low of bar 24, his reward was this. And what is more likely, that he would get here, or would the market get here? I think more likely we would not get here, so that means more likely we would get here. And you can see that's where exactly the market went. Now I said minor reversal, which means sideways. Can the bulls buy this double bottom 50, double bottom 48, pull back to the moving average? Well, 3 consecutive bear bars by climax, probably sellers above. If the bars and the range was bigger, bears would be selling the 56 close and selling the 57 high. But, the past 10 bars have been in a 2-point range, and that makes it difficult to make money selling unless you're selling at the absolute high, like above 52. So while a second leg sideways to down is likely, if we go above 57, it's not really a very good short. Obvious support down here where we reversed up repeatedly. We have a breakout here, a pullback here, so that's also a target, but it's only about 6 ticks below where we are. Bulls, I don't think they'll buy above 57. We have 3 bars down, and the rally was a buy vacuum test of resistance, especially the open of the day. Yes, the 15 high, but I think the open of the day is more important. Bulls, a lot of the bulls will wait to see if we get a couple legs sideways or a couple legs down, and then they'll look to buy. So no urgency to buy, probably at least 2 or 3 more bars sideways to down, but difficult for the bears because we may simply go sideways at the moving average. Stop order bears 54, not a good looking stop order sell, so probably buyers here around 5 ticks below 54. If the bears have sold below 54, probably are scalping for 1 point, so they have a limit order to buy 5 ticks below 54, and as a result you have bulls buying there as well, betting that the bears will not make their money. Three consecutive bear bars. Odds are more sideways to down, but unlikely to go very far down without first going sideways because this channel is so tight. Should get some bounce here because it's 6 ticks below 54, and most of the bears will scalp out with 1 point. You have some sell the close bears who sold the close of the third bear bar 56, trying to scalp out for 1 point, and they need 1 more tick in this sell-off. At what point do bears start selling closes? They need more than this. This is probably still a bear leg in a trading range, even though it's pretty good for the bears. The stop order bears made money, and the limit order bears who sold the 56 close might make money. They need 1 more tick, but still more likely we're going to go sideways here. We're at the 60-minute moving average, the 5-minute moving average, And as I said, we'll probably stay within a couple points of the open of the day. So we're below it a couple points. I don't know that we'll get above it a couple of points, but less likely than leg one, pullback, leg two. Market tried leg one, leg two here, leg one, pullback, and did not get leg two. We got a bull breakout. Tried it here, leg one, pullback, leg two, just went sideways. Well, this did work. So leg one, pullback, leg two, bull channel, bear flag. This is what the bears are hoping that they get today, but I think the odds are against it. Five consecutive bear bars. Not a lot of bulls buying above 58, but you'll have bears buying back shorts. So we could get a little bit of bounce here. So probably sellers somewhere above 58, 58 high or 1 point higher. However, selling 58 high is a problem. We're fairly high down, and the reversal is probably minor, which means trading range instead of bear trend. So normally after 5 bars down, I would be selling highs, but we're too far down, and it's about a 50% pullback. So I don't want to sell the 58 high, maybe 1 point higher. And because of the 5 bars down, a lot of the bulls will want the market to go sideways and get a micro double bottom before they buy. Confusing, right? So you got a small version of big up, big down, big confusion. Bears want to sell after 5 bear bars, but they don't want to sell too low. And the bulls want some kind of a double bottom. So they want to buy, and they know the market's probably not going to fall very far, but they'd rather have a second entry buy or a limit order buy, like buying below 48 or buying below 58 or 59. Probably buyers below 58. Sellers probably are higher up. You have limit order bulls who bought the 54 low. They needed to get 1 tick higher to make their money. They buy the 54 low, 1 point lower. Since this is a trading range, they probably will make money. So probably buyers below 58 and sellers around the 54 low and the open of the day. But as I've been saying for hours, we'll probably end up closing right around where we are. And today will probably be another doji day. For the bears, this is a break below a bull channel, a bear flag. They're looking for leg one, pullback, leg two, down. Leg one, not all that strong. Leg two, just about as strong as the bear leg down. So despite 5 bear bars, more likely the best the bears get will be a trading range. Here we had 5 bear bars, but every bear body got bigger and bigger and bigger. So we were accelerating down. And the bears got trend resumption, leg one, pullback, leg two. We do not have this today. More likely limit order market, traders buying below bars and selling above, but not selling at the 58 high. They probably want to sell higher. Bar 60, the end of the 5th hour, and tight trading range. 2 dojis, not a good looking sell signal bar, probably sideways. We're right at the 60-minute moving average. I said that we may get stuck in the range from a couple of days ago, and it looks like that's what we're doing. The bulls see a head and shoulders bottom, the bears see a double top, breakout mode. Bears trying to trigger a sell by getting below last hour's low, but probably buyers not far below. probably will have a hard time falling far below the open of the day, and we'll probably end up closing around here, within a couple points of the open, a couple points below, a couple points above. Bulls trying to create a high two buy, and the bears want to get a low two short. But it's more of a limit order market. You can also call it a wedge bull flag, 3 pushes down, 48, 58, 61. But, with the 5 bars down, I still think more likely we'll get a little bit more down, and therefore a lot of bulls will not buy above 62. Bears will try to create a low two short, so if we go above 62, we'll probably try to get a double top, 59, but probably then buyers below. The bears want to get below this double bottom and the last week's low, but I think it's more likely we'll close around the open of the day. The market's just sitting here. The bars are 3 ticks tall and sideways, no momentum, and that makes a swing up or down from here unlikely. Tight channel bear trend, just like we had a tight channel bull trend. The bulls see it as a wedge with 48 and 58 or 52 and 58, and the bears are hoping to get down below the double bottom here and back below the low of last week. Those are the 2 magnets, the open of the day and the low of last week, and we're almost to the middle of the 2 targets. There's the midpoint. Obviously, I think we're probably going to bounce or go sideways because the sell-off is just not all that strong, despite the 5 consecutive bear bars. But the bars here, 2, 3 ticks tall, really hard to make money, even with limit orders. This is the buy zone, below bars, below 59, below 58. But, we may end up just going sideways for a few bars, and then at the end of the day, decide between going down to last week's low or up to today's open. Bears will try to get the double top around the 59 high. Limit order bulls who bought the 58 low are scalping out here, but we probably will get to the 59 high. Limit order bears, I think it's tough. I still think we're always in long, despite the 5 bear bars. I think it's more likely that we'll close around the open than around the low of last week. But I also think most bulls and most bears are scalping. So I think most of the bulls who bought below are taking profits here. And most traders are betting against a swing at the end of the day. In other words, they're scalping. They're not holding on to positions. Bears have their double top. They want a break below the neckline and then a close down below the low of last week, and the bulls want the close above the open of the day. I think it's slightly more likely that we'll close around the open than down at the low of last week, simply because we've had strong reversals up from the August high, and we strongly broke below last week's low. We tested it here and we rallied, and the rally is strong. The reversal is strong enough to make me think that we have to test other important things higher up. And while we tested this major lower high, I suspect we're going to test higher. The bulls try to get a head and shoulders bottom, left shoulder, head, right shoulder, and the bears want the double top, break below the neckline, measure, move down. While I ultimately think we're going down below 2400 at some point in the next 2 or 3 months, we still might get one more new high first. Difficult to do anything right here. My last trade was buying the 58 low, and I scalped out. and I did not do anything here. Did not buy below 67, although it would have been profitable, and I did not sell above 65. It might be difficult to get anything done. We've lost. We came into the day with very little energy, a 10-bar tight range, and we've been in a tight range here for 20 bars. While it's possible that we could get a buy the close or sell the close finish, it's not likely. Just look at the day. Even the strongest move of the day, the sell-off, had bad follow-through after every bar, and therefore, if this were occurring now, it would be very difficult for bears to sell closes. Bear bar, bull bar, bear bar, bull bar. I think most bears would not treat that like a sell the close bear trend. So it may, we may not get anything in the remainder of the day. If we do get a buy or sell the close trend, it usually starts after 12:30, maybe 12:35, and lasts 4 to 6 bars. And usually you don't decide that it is a trend until at least the second bar, sometimes the third bar. So usually there's not much left to the trade. Break above a small double top, and bulls would like the day to close up on its high. Remember, on the daily chart, yesterday's a buy signal, a pullback and a bull trend. Not a good looking buy signal, especially given that we've been sideways for 10 bars, and most of the bars over the past week have been dojis. So not a strong buy setup. It's a little early for a buy the close finish. If a buy the close finish starts too early, it usually fails and reverses before the end of the day. Remember, I gave that example of this, where we sold off, reversed up, got a lower high in a bull channel, and then sold off. This began around 10 o'clock. We're beginning here in the last 20 minutes, but that's what the bears are hoping. I'm currently flat, and I have not taken a trade in about an hour, but there's still a small chance that we could get a trend at the end of the day. So I'll watch to see what the next couple of bars look like. Is it sell the market? I think it's pretty dangerous, right? The bears are trying to get trend resumption down. They want to close, just like the bulls wanted to close above the high of yesterday. The bears want to close below the low of last week. But all three moving averages are within a point. We're in the middle of a 5-hour tight range. It's not a very high probability sell. I think it's better to do nothing. It's starting a little bit late. Normally, a sell the close finish starts at 12:30, 12:35, but I'm not going to argue if it goes down 3, 4, 5 consecutive bear bars, then it's sell the close. However, I think it's difficult to sell, at the bottom of a 40 bar or 30 bar tight range. What do the sell the close bears do if 76 is a bull bar? They're in trouble, right? We sold off earlier in the day. I talked about this with bad follow through. We keep getting bull bars on the way down, and this might be the same thing. But as I said, if we start to do that, I think it'll be very difficult for the bears to hold on to shorts. They don't want to take a chance that we get a sharp reversal up. So it makes it difficult to make money. You sell the close 75 and you're already down 1 point. And if the market goes one tick above 76, you'll probably be forced out with a 1 point loss. And what is your goal? How much do you think you're going to make by selling the 75 close? 1 point, 2 points? It's always possible we could collapse, but the chance of that is small. Most likely we're going to continue in a tight range around the open of the day, and therefore the math is very bad for selling the 75 close. Low probability of a swing move, very low probability, maybe 30% of any significant swing down, 4 points down, 20%. Yet the risk is big. You sell the 75 close, stop above 75. Your initial risk is 2 points, and the probability is so low that the math is bad. And for the bulls, buying the 75 close, it had to go up 5 ticks. It went up 4. I wouldn't have done it simply because the range is so tight. And this late in the day, I don't want to be scaling in. So it looks like I'm going to be trapped out here. To see how in the final seconds, 75 ended up with a bare body. So it makes it probably sell the close, but I'm not doing it. I'll wait for tomorrow. Looks like the bears are getting their sell the close. I'm flat. I'm not trading it. Weekly chart. Last week, sell signal for the failed breakout. This week, so far, a bad entry bar, but I said yesterday there's still a lot of days left to the week, and it could end up totally reversing the rally of 2 weeks ago. Fairly predictable day today. Yesterday, I think the important thing yesterday did was it tested below the August high. We're in a broad bull channel, and every time we go above a prior high, there are sellers above, and we come back to that breakout point. Here we fell far below the breakout point. At a minimum, it was likely that we would dip a little bit below the breakout point. I think we're probably going to come down around here over the next couple of months. However, we may get one more new high first. Tight trading range in a bull trend. There's no clear top yet. We have a second entry short here, IOI, but bad signal bar, a doji, bad context, 3 dojis, bad sell entry bar here, and bad follow through. So not a clear top. Weekly chart, interesting because last week was a doji and therefore a sell signal bar for a failed breakout. And the weekly chart now has, I think, 45, maybe 46 weeks without touching the moving average. Only once in the history of the E-mini has it come close to this before. And that was in 2003. It was about for 50 weeks. And now we're above 45, 46 weeks. The second most, I think, was like 25 weeks. So in 2003, it was extremely overbought, and it has not come anywhere close to that until now. And this is now equally extremely overbought. In 2003, it pulled back 10% and stayed sideways for a year. I think we'll pull back 5 to 10% and stay sideways for several months, maybe longer. But, I am far less bullish than the people on television. Now, the weekly channel is very tight. Therefore, whatever reversal we get will probably be minor, which means the best that the bears get over the next 2 or 3 months is a trading range. The first target is this double bottom, and next target here, we have a spike up pullback channel. I think 50-50 chance we get down here, which would be about a 200.10% correction. Monthly chart is really incredible. We have 11 bars in a bull microchannel, and I don't remember ever seeing that in the E-mini, and therefore it's unsustainable. Can we get 50, 100 bars without any bar dipping below the low of the prior bar? No, we cannot, right? And I say that, obviously mathematically it's possible, but in the real world, that's not how the real world operates. And therefore, the odds are very high that we'll get a pullback soon, another month or 2 or 3. But the 17, 18-month channel is very tight. The pullback will therefore be a bull flag. It may be simply 1 month like this, and we then might go up for another 20 months, or it may be deeper. It may go sideways, maybe 1 month here, and then sideways, and then several months down. Don't know. I think we'll probably do something like this, go sideways for a few months, maybe more, and maybe get a bigger correction. This was, I think, close to a 20% correction. I don't think we'll get that much, but I think, we'll go sideways for a few bars and drop at least 5 to 10%. Yesterday, we dipped below the breakout point on the daily chart, the August high, and reversed up sharply. And then we reversed up again, and then from a higher low. And then today, when you have a strong reversal like yesterday, 50% chance you get follow through buying on the open, and we did not. And 75% chance you're going to get at least a couple of hours of sideways trading beginning by the end of the second hour. And I think, we began the sideways trading with the first day of the day, first part of the day. We sold off, but the sell-off was really terrible. Every time we get a big bear bar, we get a bull bar all the way down. And that made it likely that this was a bear leg and what would become a trading range, which means that we would get a bull reversal. And it sold off for a couple hours. Trading range days typically have legs that last 2 to 3 hours. So we went down a couple hours, up a couple hours, and this is a lower high, so you could argue that we've been going down for a couple hours again here. Stop orders today. Bar 5 remained the high of the day, and it's a okay sell signal bar for a second failed breakout below yesterday's low, above yesterday's high. I said that when you trigger a sell like that and then you immediately get a buy, like on bar 6, I typically do not take the buy. I do not reverse. So if I'm taking that sell below 5, I'm holding short, stop above 5. And the bears who did that made about 4 points. I said that when we got the bear breakout below the bear channel on 24, I said 75% chance we would get a bull breakout and only 25% chance we would accelerate down into a strong bear trend. I said the odds were against today going both above yesterday's high and below yesterday's low, because yesterday had a big range and because it reversed up very strongly. And therefore, whatever sell-off we got would probably reverse up somewhere above yesterday's low. And this is what we had: the bear breakout of the bear channel and then the reversal. So 25 probably the start of a swing up for a couple hours, maybe more. So it's a stop entry buy. You can see we had a pullback bar 30, 50% pullback of this initial leg up, and the bears tried twice to get below it, 36 and 38, and failed. And we got a double bottom with a decent bull bar. Well, stop entry traders, the first stop entry trade I think is the bar 5 low, and the stop entry shorts on the way down are really not that good. Maybe here, but we're so light and we're at critical support, last week's low, that we're probably not going down very far. And then the stop entry bulls had a buy here, and I would not take any of these stop entries. I can see an argument for taking the stop entry short 37. You get a wedge 1, 2, 3, or 1, 2, 3, 4. A breakout test 14 low, decent sell signal bar, but to me it looked like we're just reversing every few bars. And at that time I thought we had to get back to the open of the day, and therefore I thought it was a low probability short below 37. However, it was enough to scare bulls out. 39 double bottom, 30 probably getting to the open of the day, probably not much higher. If we get above the high of the day, we probably will not get much above it. So not much room on the upside. 54, you can call it a wedge, breakout test of the open of the day, micro double top of the open of the day. But I'd rather be selling with limit orders, like selling above a high one buy signal bar that has a bear body, 52, rather than selling with a stop below 54, although that was profitable. We had 5 consecutive bear bars, 58, so probably a small second leg down, 63, and there we have a high 2 buy, or you can call it a wedge with 52 or 48 as the first leg down. I thought we would test up to the open of the day, and I thought we probably would stay within a couple points of the open of the day for the remainder of the day. Instead, we sold off. We have a slight lower high of 74, second entry short 72, but 3 doji bars, not a good sell setup for a stop entry trader. Buy the close, sell the close. Well, on the way down, I thought it was never clearly sell the close. I thought it was limit order sells, and The bulls had a hard time making money. I'll talk about that in a minute, but not really good sell the close. And this is not really good buy the close. Maybe bar 56, 57, sell the close, but really not going to be much down, because I think at this point we're going to have a hard time falling very far. And then sell the close 75 or 76. If you're lucky, you made 2 points. More likely you'll end up with 1 point. Limit orders up in here. I think it's not worth trading. Probably after the 3 bear bars, 13, and the tail on top of 14, sellers above, and then probably sellers above 21, but probably not going much lower. And then for the bears, for the bulls, we had negative gaps, and I thought that was important. 15 going 1 tick above 8, 17 going 1 tick above 14. We had a real gap with 19 and 17. There was still a chance of a small pullback bear trend, but with the reversal up as violent as it was yesterday and repeatedly turning up, I thought it was more likely that the sell-off would be about a 50% pullback, maybe a test of the breakout point yesterday, 51 high, which it was. So, even though it was hard for the bulls to make money, I thought it was reasonable to look to buy, and it became a lot easier with the reversal on 24, probably buyers below 27. Hard to buy below 32, even though we had 2 bull bars, and then really difficult in here unless you were using wide stops and scaling in. Probably buyers below 42. We have a double bottom, and then up here, I personally think it's difficult to trade. If I were doing anything, just like down here, I thought bear leg in a trading range, therefore the buy zone. Up here, a sell, a bull leg in what would be a trading range, and we're in the sell zone around the open of the day. Sellers about 58, but not much down. Buyers below bars, probably buyers below 65. And then up here, I chose not to do the sell the close. Looks like we're probably going to close above last week's low. So for the bulls, another double bottom. We had a double bottom here testing the August high, and now we have a double bottom testing last week's low. And as I said, right up to the end of the week, there is a chance that even though the weekly chart right now is a doji bar, there is a chance that we could get a big surprise even in the final 2 hours of the week and collapse down to the low 2 weeks ago, and this week could end up as a big bear reversal bar. This is also the end of the month, and if we close down on the weekly chart, that would turn the monthly chart into another doji. We had a doji bar last month. Open of the month is at 24.74 or so. So 20 points below where we are. And if the weekly chart falls 20 points, that's the same price, 24.74. So if the weekly price, if we fall 20 points by the end of the week, and we can do it in the final 2 hours of the week, all of a sudden we have a reversal on the weekly chart. This will be a big bear bar closing down here. And the monthly chart at the end of the month would be another doji bar. So another sign of weakness would be 3 doji bars in the past 4 bars, and it would increase the chances that we'll start getting a pullback. In other words, October trading below the September low. The September low is 24.44, and right now that's about 50 points below where we are. So that's starting to get into some serious pullback. Okay, question for a beginner focusing swing trades. What trades would you take and where would you get out? I said on the open, I thought it was reasonable to sell on a stop below 5, put a stop above 5. And had I taken that, I would get out above 25. And I thought it was also reasonable to buy above 25 or below 27, although it would be really difficult to hold long after this wedge rally with the bear bar closing on its low. I thought 37 was not enough for the bears to go short. I thought we had to get closer to the open of the day, but I think it would be hard to hold long had a person bought above 25, and we tried to reverse with a better sell signal bar, tried to reverse with a better signal bar here. So I think it would be hard to hold long, and it would be hard to get back long if you get out above 39. But that's one of those those Walmart trades that you buy above 25, you put a stop below 25, buy above 25, put a stop below 24, and place a limit order to buy, to sell out 4 points higher, would not get filled, and a stop down here. Or you could go for a measured move, stop below 24, you buy above 24 and try to get out with a measured move up, which you would have been able to do. Had you bought above 25 and treated it like a Walmart trade, go to Walmart and come back in an hour or two, and your 4 point limit order would not have been filled. Depending on where you got back from Walmart, you'd get out either below 54 around the third bear close or above 58. And then through here, I think these are not beginner trades. Okay, question: the examples and slides that you show throughout the day, are they part of the Brooks training course? They are not, although just about every one of them has a similar slide in the Brooks training course. So, what I keep doing with my example slides is, I did this I've been doing it for decades, for 30 years now. Anytime I see an interesting chart, I save it. And, prior to, 5 or 10 years ago, I used to print them all out, and I had all these files of all these different patterns. I had hundreds of them, maybe thousands. And now what I do is, if I see something that can illustrate a point, I save it and create a slide, a PowerPoint slide, and then I put text there as well. And then I just show it during the course. And if I later, next year, next 3 years, come up with a better example, I'll delete the one that I currently have, or if I have 5, I'll delete the worst one and save the new one. So my example slides keep getting better and better and better. Also, I use them to create webinars and lectures. For example, I'll be talking at Futures I/O in a couple of weeks, and I'm using a lot of the example slides when I speak for that webinar. And then I'll be talking in Las Vegas beginning of November, and same thing, I'll be using the example slides to create a lecture. Okay, question: what is the most amount of points you have lost in a trade over the past 3 to 6 months? Oh gosh, I don't even know. I don't know. I can tell you that 30 years ago, I once lost, I'm not even sure of that. I think I once lost 20 points one day, right after the crash, the 87, maybe even 10 points, but, I lost a lot of points. Back then, I was a beginner trader and I was losing money. Back then, at the time of the crash, the days were very, very big and the market was moving fast, and you could not place orders on a computer at home. You had to call up. So you had time, it takes time to dial the number or even speed dial it. You have to wait for someone to answer the phone. That person is at a desk near the trading floor. He has to signal a runner to take the order to a trader in the pit. The trader in the pit has to find someone to take the other side of the order. He gets the fill, gives the fill to the runner. The runner takes it back to the guy at the desk, and the guy at the desk gives you the trade. And, if you're trying to day trade, especially if you're trying to scalp, which I was not doing much of 30 years ago, it was scary. If you're trying to place an order, especially if you're trying to get out and the phone rings once, you're just hoping, will they pick up? Will they pick up? But it rings twice. It rings 3 times. In the 87 crash, I got out of all trades right before I went to work. I had a whole bunch of surgery to do that day, and I was short. I was heavily short, the equivalent of the equivalent of 65 E-mini contracts on the day of the crash. And I had to go to work. I had a whole bunch of patients that needed surgery, so I closed out all my shorts. And if I were long, or if I placed a limit order to buy on the day of the crash, and the market fell 5 or 10 points, and I got filled, and then I see the market continue down another 5 points, 10 points, and I decided that I had to get out, and I had to call. This again, I was not long, but there are people who were long, and there were people who had to call to say, get me out, sell at the market, and the brokers did not answer the phone. Or if they answer the phone, they would say, there are no bids, nobody wants to buy, so you're stuck holding your long, and nobody's going to buy it from you. And I ran into one guy, 1988, and he was one of those guys who bought, or I think he bought early in the day. The day rallied early for a little bit, and he bought. And after an hour or two, when it started to go down, he called his broker, and the broker said, there are no bids. I can't get you out. You're stuck long, and the market was falling fast. You turn on the radio that day, and the radio would say the stock market is down big. Nobody knows how much it's down, but it's down big. No one knew if it was down 100 points, 500 points. It turned out it was down 500 points. At the time, that was 25%, 26%, but no one knew. And if you had to stop to get yourself out, so if you buy and you put a stop to get yourself out, there's no bid. So if you have a stop, you don't get out until the next time there's a tick that goes up. But it didn't tick up. It didn't tick up until the market fell like 25%. So, so the potential to lose a lot was far greater long ago. Because of that, I always talk about how you always have to have stops in the market. One of the advantages of so many computers trading right now is there are always bids. The computer, if the market is collapsing, like the flash crash, it's always going to bounce up a tick or two all the way down, because there are computer models that trade extremes. They bet against extremes, and so they'll regularly be buying all the way down. And therefore, it's extremely unlikely that we'll have the same situation that we had in '87, where there were no bids. Now, back to your question: what's the most number of points I've lost in the past 6 months on any one trade? I don't know. I would say it would be unusual for me to lose more than 3 points on a trade. Have I lost 4 points? I probably have. Have I lost 6 points? I doubt it. I usually get out if I'm in a trade and it's going against me. I'm usually pretty quick to get out. I'm usually pretty quick to decide, hey, it should not be doing that, and therefore I'm wrong. And I don't hold on to the trade and say, well, maybe I'll become right. Maybe the market is not as smart as me, and it'll start going my way. I don't do that. I usually just get out quickly, and if it reverses and goes my way, then I'll re-enter the trade. But I usually, because I mostly scalp, I really don't want to be holding on to bad trades. One of my rules is if I buy a breakout in the market, well, let me just see if I can find an example. And they happen all the time. Well, here, had I bought for any reason here and I got 3 bars against me, I'm going to get out, especially since 50% of strong moves early in the day reverse. So 50% chance this is going to be the high of the day. So the opposite is true if I'm short. If I'm short and I see, if I sold for any reason, which I would not here, and I see a pair of strong bull bars, I don't need 3 bull bars. I'm going to get out. This is a double bottom. Good buy signal bar here, good buy signal bar here. I don't care if my stop was up here. So if I sold for any reason and I held short thinking we might get one more leg down, and then I see consecutive good bull bars and a double bottom like that, I'm not going to let my stop get hit. I'm going to get out. Same with here. If I sold the close and I see a second entry buy, I'm going to get out above the second entry buy. I certainly would get out during this big reversal. So even though my stop was up here, it doesn't matter where I sold. If I sold below this bar, if I sold below that bar, if I sold this close, if I sold for any reason, my stop is up here, I'm not going to let it get hit. That stop is a catastrophic stop. If I suddenly fall asleep, if I suddenly develop narcolepsy, or if I suddenly have some emergency and I have to run away from my computer and I can't come back, that is a catastrophic stop to prevent me from a catastrophic loss. But, I never intend on letting a wide stop get hit. Question, I took a stop entry below 5, second reversal down from above yesterday's high, but I was disappointed by the close of 6. Should I have gotten out break even or held with a stop above 5? I talked about that. I understand that is a terrible entry bar, but I said at the time that if you're selling below 5, you're doing it for a swing, and you're doing it with 5 doji bars on the day, and therefore, we may go sideways more. So I think if you're selling below 5, it's probably better to keep the stop above, the protective stop above 5, and just hold your nose. And then once you get the 3 bear bars here, you start saying, oh, I'm feeling pretty good about this. It came back to your entry price on 15, tested the bar 5, 1 tick below bar 5, which is where the bears got short, but could not get above the entry price. So, I personally, I hope I made that clear that it was okay to sell below 5 if you treated it like a swing, and we're in a tight trading range, so we may go sideways more. So you have to rely on your stop. Okay, if you see 3D, I assume that means 3 consecutive bear bars, which we have right here, and 2 are closing exactly on the low, and the third closes near the low. The odds are we're going to get a second leg down. Anyway, so if you see 3D, bar 13, or a 5 to 6 bar microchannel like bar 14, you start looking to sell highs. Yes, okay, because you think there's going to be a second leg down. Okay, I was concerned about the support just below the 60-minute moving average and the lack of big bear bars. In a situation like that, I understand. You see 3 bear bars closing in the lows. Relative to the other bars in the day, they're pretty good. It's probably about a 20 gap bar buy setup. We've been above the moving average for about 20 bars, but it's a second reversal down from yesterday's high, and now it looks like it's triggering. It looks like everyone is agreeing that we're going down, and therefore, after we have those 3 bear bars, I'm going to put my stop, maybe above 11 or 9. I think I even said that in the room, and I am looking to sell. If 14 closed on its high, I would not take the sell. But if it has a 2-tick tail or even a 3-tick tail, which it had, then I think it's an okay sell, looking for at least a small second leg down and looking for a 4-point move below 5. So I'm looking for the market to fall 17 or 18 ticks below the 5 low. Question, if you were trading daily bars, would you sell below today's bar on the Globex chart for a 40-point move down? Okay. So if I'm trading the daily chart and I'm looking at the daily Globex chart, would I sell below today's daily bar? We have a bear IOI. We have a bear IOI up here as well. Would I sell below it for a 40-point down? I don't know if you were in the room last week. On the daily chart, I went short over here, and I am short. And whenever you hear people say I'm short or I'm long, it's not what people used to mean in the old days. So, if you hear me say I'm short, that does not mean Al is short the E-mini, okay? It means that I'm short somehow. And like on television, if you sometimes hear someone say I'm short or I'm long, it's not exactly what you think. However, it's a shorthand way of conveying a point. There are so many ways to be short and so many ways to be long, and people just want to make the point and move on. So, for example, I am short using puts and put spreads. That's one way to be short. Another way to be short is to actually sell the E-mini or the Spider or the QQQs or the NASDAQ or the IWM, or buying inverse ETFs like the VXX, right? And all of those are getting short. And So I'd rather just say I'm short than every time saying, oh, I'm short puts and put spreads and different things. And the same true on television. Whenever you hear someone like on Fast Money say, I'm short or I'm long, he might not be what you think. For example, sometimes somebody will say, I'm long Apple. And what you're hearing is he bought Apple stock. And that might not be what he means. He might mean I bought the QQQs or I bought the NASDAQ futures. And in his mind, he's long Apple because Apple is the most important component of those stocks and ETFs, right? So instead of going into details and saying like I bought the QQQs because I think Apple is going to go higher, and for whatever reason I don't want to buy Apple. Maybe the price of Apple is too high, and who knows what, right? Or I bought QQQ calls because the bid-ask spread is tighter than the bid-ask spread in Apple. He doesn't want to say all that. He just, in his mind, he thinks Apple is going up, so he has to somehow get long some equivalent of Apple. So he just says, I'm long Apple. And so whenever you hear somebody say, I'm long Apple, or I'm short Google, or I just sold the E-mini, or I just bought the Spider, they are not saying what you believe they're saying. They're just telling you something. They might be saying exactly what they're saying, but it's better to assume that they're talking in a shorthand way, and they may not be doing what you think they're doing. They may have a butterfly spread. They may have, some kind of delta neutral strategy, short the E-mini and long calls. You don't know what they mean, but the point they're making is if they say I'm short the E-mini, whether or not they actually sold the E-mini, they did something that is highly correlated with being short the E-mini, and it's just too long. People don't want to spend 3 sentences, 4 sentences when they're just trying to quickly make a point and then move on to the next point. Okay, I'm losing my voice. You can see again we broke below last week's low, triggering the weekly sell signal again a third time. This is the second time. Yesterday was the first time, and here's the third time. And for the bulls, it's a bull flag. We have a strong reversal up, and we have a double bottom, higher low, major trend reversal. We have a bear trend, a bull breakout, a double bottom, higher low. It's reasonable to be long, looking for a swing up to a new all-time high. For the bears, they have a double top bear flag, a neckline, and they're hoping for a measured move down. It's okay to be short. For me, right now, my options are in January, because I said it might take 1 or 2 or 3 months for the monthly chart to finally get a pullback, and therefore I don't want to use near-term or near-dated options like October, because they'll expire in a few weeks, and the move down may not start for another 2 months. So I want to make sure that I'm giving enough time for the market to do what I think it's going to do. This to me looks bullish. We have a parabolic rally, reversal up for major support, and now we have a double bottom bull flag from significant support. However, as I said, even if we do go higher, I think we'll have a hard time getting much above the all-time high. And if we get 20 points above my entry where I went short somewhere around here, I probably will add to my short position. Okay, hope everybody has a good night.